Yo, what's popping? It's GSMFX General Gang, and I'm happy to see you again on this channel. And as I promised, when we reach about 500 subscribers, I will release the new video about smart money concept, how to combine it with the SNR level. So today, I won't dive deeper into Malaysian SNR because you have an idea about it. And if you have no idea, you have not any idea, you can even check my previous videos. You can just go into my channel. Okay, you can click into my I think my description below. Then you may check to my channel. So you may see I've already put all videos into the playlists. So you may choose the Malaysian SNR playlist. Then you may start with the first video to the end video. Then I hope you will get an idea about Malaysian SNR. But for the study of today, because I promised you this, and I will give you what I've promised. So now I think everyone understand. Okay, I think everyone understand about the main objective of forex market. I think everyone understand, because the main objective of forex market is to seek the liquidity, and I do remember the inner cycle trader ICT, in one of the sessions, I remember he says that the market is run by IPDA. Okay, IPDA. I think everyone understand about IPDA. If you have no idea, the word IPDA represents interbank price delivery algorithm. That's the meaning of IPDA. So IPDA has several objectives, but among of the very crucial objective is to seek liquidity. Seek liquidity. Okay, is to seek the liquidity, because always we know that the forex market is not run randomly, because if it was really random, I cannot be here and then teaching you this stuff, because how can I teach you about this thing if something is random? So I'm teaching you this because the market has the tendency of repeating the same stuff over and over again. Okay, that's why we say this market is not really random. It is being run by certain algorithm, okay, by certain algorithm, which provides the efficient price delivery according to Michael. So then, in our trading, we have to really know that we have to identify the major liquidity. We have to identify the area where we can check the liquidity, because after knowing where is the liquidity, then it can be easy for us to take a very sniper entry, or to take I can say like a very precise entry. Okay, you can increase your precision in trading. That's what you have to really understand. Okay, and it is what it is. Okay, you can't remove the liquidity out from the equation, because you won't be able to trade forex market. I don't know about other markets, but in terms of forex, we have to really pay attention to the liquidity. That's how it is. Okay, and liquidity in simple words is equal to retailer stop losses. Okay, is equal to retailer stop losses. So you have to pay attention to where is the liquidity. Okay, so I don't want to dive deeper into more words, because I was trying to give you an idea or the simple description about liquidity. Okay, you have to really understand the liquidity. Liquidity is equal to stop losses, where people they want to risk that much. Okay, whereas the bunch of people risk much, then you should avoid that area. Okay, you should avoid that area. So how do we identify liquidity? First of all, how do we identify liquidity? How do we identify liquidity? I'll be checking for notes. One day, I pass through everyone notice. Okay, make sure you take a notes. There's something very important. And without forgetting, there is I think there is a 2 slots remained for people who needs mentorship. This is not a must. This is all about you if you really wish. Okay, so there is 2 slots for the people who needs mentorship. If you want to, you can check into my description. My WhatsApp number is right there, or you may check me on Telegram or something. Then you may join. Okay, this is valid until 20th of this month. Okay, 20th of this month. So you're welcome. I have only 2 slots. Put into your mind, I have only 2 slots, but it is not a must for you to join. If this information I'm providing to YouTube, they are more than enough for you, then no need for mentorship, right? Okay, how do we, or sorry, how do we identify liquidity. Okay, that's the thing. How do I identify liquidity? First of all, you really need to understand we don't know where is the liquidity because we don't have the data like the interbank has. You know, the interbank, I think that's it's something like rumors or something. There's no actual, okay, there's no actual thing that will tend to show you where is the other retailer stop loss, not even chart prints, not even depth of the market and all those stuff. They can never show you where there is actual the stop losses of other retailers. But what you really understand, what you have to understand, I know the interbanks, they have more data than us because they've been trading into these markets for long. So they have an idea where is the other retailers stop loss. Okay, they know where other people they tend to put their stop losses. So those data for us, we don't have. So we only guess is the area where is the liquidity. We only guess, okay? We only guess. Put that into your mind. We only guess where is the important liquidity. So I will teach you how to guess. I won't teach you how to be perfect on that because in this market, there's nothing perfect for sure. You can't get any precise, you can't get every time precise the entries. No, we cannot do that because if it was like that, then I can be a millionaire by this time. Okay, so how do I identify liquidity? That will be our first question. How do we see the liquidity? Now I want to give you this idea. How do we identify the liquidity? Now let me put this here and then let me draw something like this. Okay, let's say the market is making high and low like this. Okay, give you the first breakout structure. Then the market goes up and then retrace, give you another breakout structure. Okay, if the market will go again up and then now we go again up, I think every retailer will be willing to enter into this market for sure. Every single retailer will be seducted to enter into this market. Why? Because they know market is bearish, because the market is tending to make the higher highs and higher, okay? It's tending to make the higher low and lower lows like this, okay? So every single retailer will be willing to get into this trade and then get the move, okay? Everyone will be willing to get into this trade and to get the move because they have seen the first break of structure like this, and they have seen another break of structure like this. So what do they think? Now they really need to pay attention into these areas because they believe this market is bearish. So they will go into, okay, they will tend to go into the market and then risk this, they risk something into around here. Now I'm talking about SMC traders, the one who trade market structure, because those guys or those guys who trade SMC, they don't really understand what they're doing because they trade pattern without knowing. They trade pattern without knowing. So because now they see market is making the series of lower lows, now they understand market is bearish, which is right, market is bearish. But what they do, because now they will identify something right here, or they will identify something like trend line between this thing, let's say, or something like this. Okay, they will identify, okay, something like this. Okay, they identify something like this as the liquidity, and then they come into this size and then put their risk there. Okay, that's about smart money traders. They will tend to sell this stuff around these areas and then expecting what? Expecting these lows to be taken out. But we don't have only smart money traders who enter into these areas, but also we have trend line traders. These trend line traders, after seeing this, they have the first touch of the trend line, second touch of the trend line. Now, what they've been taught? They've been taught that after seeing the second touch of the trend line, then when the market is pulling up, okay, when the market is making pullback, then they want to enter into these areas, okay? On the third touch of the trend line, and where do they put their stop losses? Because they have been told that they have to put the stop loss on the previous highs. Okay, they will do something like this, put their stop loss above these highs, and they aim for 1:2. They aim for 1:2. So not only smart money traders, even trendline traders, they will risk their money here. They will risk their money right there. Okay, we don't have only that traders, but also we have breakout traders. Okay, breakout traders, they know that if the market goes up and then retrace, give them the first breakout structure. If the market goes up and then retrace, give them the second breakout structure. So what do they expect? Now they expect it to see the market give them the another breakout structure. So these breakout traders, after getting the breakout structure, they enter right away with with a sell stop. Okay, they enter right away in these areas with a sell stop, and then put their stop loss above these highs because they think that this is the protected high. Okay, this is the protected high because the first high was not broken, the second high was not broken, so they know that this is the safest zone for putting their stop loss. Okay, safest zone for putting their stop losses. So they're expecting to see the downward move and then putting their stop losses above these highs. Okay, then now okay, then now that's what the examples of traders who are willing to risk their money into these areas, because we don't have only those. Okay, even Fibonacci traders or other traders, they do something like this. They enter above they have something like I mean the discounting premium zones. They want to hear some, they can enter somewhere around here and then put their stop loss above these highs. Okay, so we have a lot of traders who are doing those shits, but think like a smart money, because now you are a smart money trader. Okay, means you are a very smart, you are a very smart person. Okay, you are very smart. One day I heard a person was saying that, okay, if you get into these markets, you have to really understand that you are going to compete with the very, very smart people, because you are engaging in the industry where there is a lot of money. So you will meet a lot of very, very smart people. So if you want to buy or you want to sell, means you have to take something from them, because you have to really understand the forex market is zero-sum game. Okay, if you are buying and getting profit, it means there's someone who is selling, getting a loss. Or if you are selling, you're getting profit, it means there's someone who is buying, getting a loss. So what they will actually do, they won't let you to get that money. So of course they will force you to do something wrong. Okay, they will force you to do something wrong. They will even create something that you will wish to see, and then they will manipulate with something that you understand that it works, and for it does not work. Okay, it does not work. That's the reason why every single trader was trapped into this size, because 90% of traders now, they believe that this high will hold. So they're aiming to get this thing. They're aiming to get this thing. So if you're smart money traders, now you understand this is the pool of liquidity. Okay, this is the pool of liquidity. We want to pay attention into this pool of liquidity. So then, if we understand this the pool of liquidity, then find something above it, because it will be high probable. Okay, let's say this is daily time frame. Okay, let me take a simple example. Okay, let's say this is 1 hour. Okay, this is 1 hour structure. Okay, this is 1 hour structure, and you have seen that this area as the trap. So what will you do? Above this 1 hour zone, above this 1 hour liquidity, above this 1 hour liquidity, you have to go to check for the higher time frames. Okay, you have to check for the higher time frames. So if you go in there and check for the higher time frames, let's say into the 4 hour, you will see that you can have something, any key level, any Malaysian SNR key level. Okay, any Malaysian SNR key level above this liquidity will be high probable. It can be right here. It can be right there. It can be something right there. Okay, let's say you identify this liquidity, right? And then there is a very clean order block in the 1 hour itself. No, that will never work. That will never work. And if you go into the 4 hour, you have a 4 hour zone in here. Or if you go into the daily, you have daily zone in here. You have to really understand this area will never work. This zone in here will never work. Trust me, will never work. Okay, don't take my words for it. Go and make research. This will never work. Okay, this will never work, because why? The hard time frames are time frames that get respected. So you have to expect that the market will do this, go into the daily key level and then sell. So that's how it is. Okay, that's how it is. Now these people are confused. Remember, their idea was market is bearish. Now market has broken for themselves. This is the major high. The major high is broken. It means now they say change of state of delivery or change of character. They have fancy names, all those stuff. But for me, names are not important, but the logic is something very important. So after this break, now they know market is bullish. So they start finding entries for buying this thing. Okay. So now this is what we call the perfect inducement, because now the market has a reason to come back down. Remember, after taking out this liquidity means the interbank algorithm bought these stop losses. These stop losses were bought by this move. This is manipulation for sure. And then what happened is this. After creating this kind of inducement, now we have a bunch of traders believing that the market is bullish, because we have the bullish break. So then what they're expecting, they expect to buy something below here. They can have the liquidity maybe. Let me try to draw it correctly. They can have something like liquidity in these areas, and then identify this as the liquidity, and then expecting the market to do this. But what market will basically do, the market will drop, and then it will consolidate for a while. During news release, this is what will happen. The market will create another break. Everyone is getting out from the market. Who wanted it to sell here? Taken out. Who wanted to buy here? Taken out. Now everyone is saying the market, the forex market is scam. Yeah, for this kind of situation, the forex market is scam. But why? Because you don't know how to read. You don't know what's the objective of forex market. Once you understand the objective, if you're doing anything, this is applied, I think, everywhere. If you're going in any organization, if you're going in any hospital or in any area that you're going, you have to really understand what is the objective of this. Once you understand the objective, forex is all about seeking the liquidity, because that's the measure, the general objective of forex market. Then you have to really pay attention to the liquidity, because the market won't run if there is no any liquidity. We have to trap some people in order to get what we want to get. Okay, we have to trap buyers to sell, or we have to trap sellers to buy. That's the major objective of the forex. So if you just take it away from the equation, or take it away from your trading plan, then I promise you, you won't get that's what you want, or it will take a lot of time for you to get the success out from this speculation. I'm pretty sure with that. Okay, that's the thing. That's the thing. Okay, anyway. So then now I want you to understand. I want you to understand this. Now let's move to market structure, because I've already explained to you how you can check for the liquidity. You know, I won't teach the whole SMC into the one video. No, it will be a too long video, and people, they don't want long videos. So I will teach these two concepts for today, and other videos I will explain a lot for. But for today, let me give you this example. Okay. Now you have to understand that the strong support will be created on a strong low. That's the thing. A strong support will be created on a strong low. What the strong low basically? Strong low will be the low that took out liquidity and then broke to the upside. This will be the characteristic of the strong low. Means swing low was taken and then structure was broken. That's the characteristic of the strong low. And the strong resistance will be created on the strong high, means the high that took out liquidity and then it broke to the downside, means the swing high was taken out. If you have no any idea about swing points, I will target the video that I was teaching swing point, but it is in Swahili, so that's the thing. So if you're not Tanzania, I think it will be very hard for you to understand. Okay, but you can even search. I think other mentors, they have those videos explaining about swing points and all other stuff. So you can have this swing high. Okay, the strong high has to take the swing high and then has to break the swing low. Remember, now here it can be done by a wick, not bad. The manipulation can be done by a wick. You remember ICT always says that the wick does the damage, but body of the candle tells you the story. Okay, the wick can do this damage. Okay, this is damage. Okay, if the liquidity is being taken out and then market pull, okay, the market pull all the way up, means now this wick right here does the damage. Okay, this can be done by the wick, remember, but the the swing high has to be broken by the body closing. Okay, even here, if on the in case of strong high, we have to see the body break. Okay, not wicks, body break. Put that into your mind. This will be the strong resistances. Yeah, that will be the strong resistances. So then how do we confirm the range? Now I'll give you one example for the sake of this video, but the more we go on, I will give another example here. Today, I will talk about a bearish example. We talk about a bearish example. Next video, I will talk about bullish example. So let's say you got daily rejected daily, the first thing. Okay, let me return you to the Malaysian thing. Let's say this is the daily key level, and then daily rejected daily in here. The candle rejected on that day zone. Okay, you had day rejected daily. Sorry, you have day rejected daily. Now you understand after day rejected daily, now you know 4 hours to give you the breakout structure like this. Okay, after getting the 4 hour breakout structure, now you have to add one thing. 1 hour time frame has to give you the trading range. 1 hour time frame has to give you the trading range. And how do we know the trading range has been formed? That's the question. Okay, so now I want to show you this. Now, because the market is bearish, remember your daily reject daily on the daily resistances, on the daily resistance, and then for I'll give you the break. Now into the 1 hour, you have to see this picture. Let's say on the 1 hour, you should have the strong high because the market is bearish. How do we know the strong high has created a weak low? Now the market will be creating these swing points like this, like this, like this. Once you get the breakout structure into the opposite direction like this, as you get the break into the opposite direction like this, now we know the range is being formed. Okay, because what confirmed the range is all about when you have the strong high, you should get the weak low. Why are we calling it weak low? Because we know that this low, in anyhow, this low will be taken out like this because market is bearish. That's why we call it a weak low. But this is strong because if the market is bearish, we don't expect this high to be taken out. Okay, we don't expect this high to be taken out. So then only after every strong high to be created, a weak low will be created too. Okay? The weak low will be created too. And what you need to understand is this market is bearish, but always you have to put this into your mind. If the market is bearish, a bounce of a bearish market to the upside is to hunt for the sell stops. Is hunt for the sell stops. Where are those sell stops? On the swing highs. On the swing highs. This. Okay, these are areas where we have a lot of liquidity because we have traders who sell on this, we have traders who sell on this, we have even traders who sell on this too, very aggressive. We have even traders who sell on this, we have even traders who sell on every zone. Okay, they can sell even in here, they can sell even in here, they can sell even in here. Even though the market will be bearish, they can they can they are right for the move. Yes, they're being stopped out so many times. So if the market give them the right entry, they won't have anything into their pockets because all money will be finished out in stop losses. Okay, so that's the thing. All right, that's the thing. So then what happened is this: after having this break to the upside, now we understand the range has been created from this highs to this lows. Remember, this picture has to be seen on the 1 hour time frame. Remember, this picture has to be seen on the 1 hour time frame for the sake of this example. But you can go into the charts and then you can even back test this, because now what I'm teaching you, don't take it as it is. Go and back test it because I'm sure about it. But how can I prove it to you without back testing? That's the thing. Okay, you have to back test it. So then, after knowing this is the liquidity, then what do? Now we understand this liquidity will be swept out. Why? Because we have even order blocks right here sometime. We have order blocks right here sometime. And the key is this. Now you understand the order blocks are more famous than the trend line. Okay, remember the past few days, I think, not few days, a lot of days before, I think maybe in 2007, 2008, 2010, people, they are believing that banks were trading by using patterns. That's why when the market was creating maybe this trend line, and then people, they expect the third touch, the market was always doing this kind of manipulation, then it goes up. Okay, that's the thing. But this time, people are engaging with order blocks. Now they understand this always the trap. They don't even believe the stupid trend lines. They understand that these are liquidities, and then now they are paying attention to order blocks. So even think like a bank. Okay, now if people, they are no longer paying attention to the trend lines and they're paying attention to the order blocks, so what will you do? They create more order blocks to confuse you. That's why some people, they ask me which order block will I use, and for me, I'm teaching you should never use an order block, because you will never see me using any order block. Mark my words, any order block in my trading from today and all the coming days. I won't use order blocks. I won't use order blocks. Okay. So then they create a lot of order blocks to confuse you, because you had this, you had even this, you had even this. Which one will you use? You're being confused. So then, so then think like this. You have to check, in order to identify the proper liquidity, you have to check a very clean order block. That's really the trap. Take it. You have to check a very clean order block. You have to check the very clean order block, baby. Let me tell you like that, because I want you to remember that. Okay. Put that into your mind. You have to check a clean order block, because that will be the actual trap. For sure. For sure, that will be the actual trap. See, because you may look on here, this won't be that clean, this won't be that clean, but you may see this is very clean order block. Very clean order block. After seeing this clean order block, then mark it out like this, like the way you want to use it, but no. After marking out like this, go into the higher time frame. Let's say this is 1 hour picture, then you go into the 4 hour, you'll find something above it. For sure. If you have a lot of zones, let's say you have a 4 hour zone in here, another zone is in here, another zone in here. Go and then go in daily and then check for the daily zone. Let's say into daily you may have this maybe RBS, okay? I mean SBR, supported broken and turn into resistance in here. Then you expect, okay? Then expect the 4 hour zone want to hold because daily is stronger than the 4 hour. So you have to delete the 4 hour zone and then you remain in the daily zone, because daily zone will be much more important. So you may expect this thing to be taken out. Taking an entry in here and then sell this stuff out from the range, okay? Out from the range, because you have to really understand if, okay, anyway, the market was bearish, okay? Anyway, the market was bearish. The main reason for the market pulling up into this range was seeking the internal range liquidity, because you have to understand this is the internal range liquidity, okay? On this trading range from this low to this high, this was the internal range liquidity. After taking the internal range liquidity, now they have created so much of liquidity below, so they will go after external range liquidity. Okay, after external range liquidity. But there is an exception for this thing. There's an exception for this thing, because you may identify this as the liquidity, right? It's fine. But sometime, okay, market will do this. Sometime market will do this. Okay, market won't never go into your, okay, might never take even your trap, because now you have identified the trap. You have the daily point of interest. But what happened? Market do something like this. Sometime market just take out this thing, okay, your trap, and then fall back down. Or sometime market go into your zone and then fall back down, okay? That's why into the market, we don't see the market make the 90% pullbacks like this. If the market was going like this, how many millionaires will be having by now? How many millionaires? We have a lot of people who are millionaires, so the market won't do that. So what will happen is this, okay? What will happen is this. Let's say the market is pushing all the way up. Let's say the market is pushing all the way up to take up the internal range liquidity, all the way up, and then taking out the internal range liquidity. Before taking the internal range liquidity, then market broke to the downside like this. Okay, now you have to delete this idea of the market getting into right here, because why? Now remember, the day was bearish because daily gave you the break. 4 hour also turned bearish because get the break into the 4 hour. Even 1 hour also has turned bearish. Remember, you have to put this into your mind. The ICT always say, if the market is bearish, expect resistance to hold and support to be broken. So every resistance will hold. Now the 1 hour has created a strong high, a high that took out the liquidity and then it broke to the downside. Now we understand if the all time frames agree with each other. Now what comes in is the expansion will begin. Okay, the expansion will begin. So you have to go into the lower time frames. This will be the case of tomorrow session. You have to go into the lower time frames and then sell this stuff. Okay, we won't expect this to be taken out anyway. That's why the market always do this, always do this, always do this. That's the reason why. Okay, so then let me give you one example or 2 examples. That will be enough for this video. Enough for this video. Mm. Mm. uh, okay. I had a nice example in here. See this. We had daily rejected area in there. See this? Daily rejected area here. Okay, into the 4 hour we have. Into the 4 hour. The 4 hour gave us the breakout structure here, I think. When I do this, oh shit. Why we do this? Now you see the breakout on the 4 hour time frame. Okay. You see the breakout on the 4 hour time frame that was so much clear like this. After seeing this break, now I understand, oh, the market is bearish. So what I have to do, I have to go into the lower time frames and then check for the break, because you have to go into the lower time frame and then check if you get the breakout. So after getting to the lower time frames, I think it was on the 1 hour. I saw that into the 1 hour time frame, I had a strong high created. I had a strong high created, a high that took out liquidity right here, and then it broke to the downside right here. And then how do I know the range was confirmed? Swing high has to broke into the upside. Remember, the range was coming from this highs to this low. The range was confirmed here because the swing high was broken in here. Okay, let me do this. After seeing this, now the range is coming from this side to this low. It's fine, but why do everyone sell? Because everyone believe the market is bearish. I know even everyone is selling on this strong high. So can I go and then pay attention to this strong high? Yes, it's strong. It's fine. But when I take liquidity into account, can you sell this here? No. Why this? No liquidity. No liquidity. Remember, the high probable sell entry have the liquidity below it. Okay, where is the liquidity for this? Nothing, because I know now I realized it. Even this strong high was created, also it's the trap itself. So I have to find something above it, because you have to put liquidity into the equation, because it's a major objective of FX market. Because after seeing this, I have to check what is above this liquidity. Remember, the liquidity was right here. Or let me mark it to the rectangle in here. The liquidity was right here. I have to find only something which is above it, because it will be a high probable. When I go into the 4 hour, what I have above the liquidity, on the 4 hour itself, I had this support. Just above it. Above it. We had the support right here. Simple. We had the support. Okay. Why support broken? I mean, SBR, support was broken, turned into resistance. Here. Just getting into this, and this was the actual London Open. This was the London Open, okay? Because in my time in Tanzania, London always open at 10 a.m. Okay? This was London Open. And then I get into this very, very simple trade, and easy to engage with. I was wondering why I don't know why some people, they didn't get into this trade. I don't. But a lot of students in my group, I think everyone got into that trade. Let me give you another example. Okay, let me give you another example. Okay, don't say I made an idea. I have a bunch of examples. You had even they rejected it in here. That's fine. They rejected it in here. And then what happened after having this? They rejected it into the far. You have a far breakout. Yeah, yes, we have a nice far breakout right here. When I do this on the line chart, now you see the proper break was right here. Okay, after having this break, now I have to go into the 1 hour, identify my trading range. This was very, very, very important stuff. Okay, into the 1 hour, what do I have? Into the 1 hour time frame. First of all, I have the strong high from the 1 hour. Where is that strong high? A high that took out liquidity in here. A high that took out liquidity in here. And then it break the major in here. After breaking this, how do I know? How do I know the range is confirmed? I have to break the swing high to the opposite direction. The swing high was broken in here. That's fine. It's fine. But after breaking this swing high, okay, after breaking this swing high, don't you see the market turn bearish? Don't you see the market turn bearish? Because after taking this swing high, remember, even 1 hour itself, even in 1 hour itself, we get a bearish break in here. Remember the example I gave you where I was teaching you. Remember the example I gave you. If we are bearish, remember, daily is bearish because we had the 4 hour breakout. 4 hours bearish because we had the 4 hour breakout. Even 1 hour also turned bearish. Now we know, oh, now the expansion has begun. So if the expansion has begun, so what we have to do? We have to go into the lower time frames and then check for the entries. In this case, I just go into the 15 minutes because why? After creating 1 hour time frame, strong high means the range will be confirmed in the 15 minutes. That's the coordination of time frames actually. Into the 1 hour, I had the strong high because this was the high that took out the liquidity in here. And then it broke to the downside right here. This is fine. How do we know the strong high has created a weak low? Has to break the swing high to the opposite direction here. Now I know my range is coming from where to where. Now I understand my range is coming from where? From these highs to these lows. Oh, wow, that's good. Okay, if the range is coming from these highs to these lows, we have to understand where is the liquidity. Now you can even check this. See this clean order block into the 15 minutes. It's clean, baby. Very, very clean. So seductive order block. Now we understand this is the trap. We know this is the trap. It won't hold anyway. After realizing this is the clean order block, because everyone is seeing this order block because we have the major break. And some people, they believe those order blocks created after the break, okay? Okay, the order blocks that broke structure, the order blocks that was created, that the result of being created is to break the structure in here. They believe those blocks are very strong. Those blocks are very strong. So if those breaks are very strong, means now they believe into that order blocks. So they go to pay attention into this. But for me, myself, after seeing this order block, I have to check for the higher time frames what zone I will have above that liquidity. So when I come into the into the 1 hour, what I had even 1 hour resistance in here, which is fresh in here. And another thing, what I have I will have to check even into the 4 hour if I can have an MTF into the 4 hour resistance, pure resistance. Even this week did not touch that resistance. Now I know, wow, I have to pay attention to that level. When you ask anyone to tell you, why did you choose this? Is this another block? No. Rejection block? No. What is this coming from nowhere? It isn't even a consequent encroachment of this week. No, it's nothing. Okay, it's even nothing. So I remember I took this entry in here. I had a 30 pip stop loss on gold, because into gold we're going to have those tight stop loss for sure, because gold is very aggressive pair. So now I know they are going after this external range liquidity. What's my entry? External 1:5. Very, very clean. Okay, very, very clean. So I don't want this video to be too long. I think on the next videos and other videos coming, I will be providing a lot of examples. Okay, so for today, this is more than enough. See you on other videos. Thank you. Have a nice moment and good luck.